So similar to the way that basically everything's moving up, with the Dixie having a tiny move down. So this is basically an inverse effect of euro finding effectively, roughly a bit of a temporary support around 96, and the pound roughly around. Well, I mean it's sliced right through it, but effectively, so long as the pound's above 106 and the euro's above 96, these are considered to be support areas that should hold for the short term. And while being above those areas adds further potential upside for those currencies and a bit of downside for the Dixie. And we all know that downside for the Dixie benefits anything that's pegged against a pound. I mean a dollar of course. So that means oil as well. So there's one thing I like about the oil situation right now, which is that it's still within this trend line. We've got bullish divergence on this 4-hourly for what that's worth. And if we just zoom out, we can see that we've been in this descending channel. It's a falling wedge basically, which would normally resolve to the upside, whether you look at it on a 4-hourly or a daily. We'll just take off some of this noise so we can see. And we've been looking for this to have a reaction. It's the strong dollar that has held this down the entire time. It's the same old story as everything else. We've been looking for this to move up to the top of the channel, sort of back above 80s, the lower 80s. But eventually, if the dollar can stay static for a little while, allow for everything to have a little bit of a move, we might actually start to see oil break out finally. And if that is the case, then over the next few weeks, few months into the cold winter quarter, we should be seeing oil push right back up, above into the 90s towards what my specific target would be, which is about $104 really for a barrel of oil.